Tax Training free EA exam prep course for 2025. Tom here, back with you to discuss the tax filing process. This is the final video in part 3 and in the entire course. It's also the shortest video. Congratulations on making it this far. Let's see what we are going to learn today. Specifically, what we will be talking about is tax return accuracy, record maintenance, and then we will spend the bulk of our time discussing electronic filing. Our free resources from irs.gov. The first two you'll recognize from the previous videos in part 3. Then we've added two new forms here in their instructions, Form 8879 and 8453. The good news is they are both short forms and short instructions, but you will want to get those and read through those for the exam. Our first topic then in this video is tax return accuracy, and we'll start by talking about reliance on tax software. The taxpayer is responsible for the amounts reported on their return, regardless of the method of preparation. So notice there, who is responsible? The taxpayer, not the tax return preparer. Of course, we want to do a great job for our clients, and we could be held civilly liable if we make a mistake. In other words, our clients could sue us. But as far as the IRS is concerned, ultimately, it is the taxpayer who is responsible for what is on their tax return. When you are using tax software, and of course we're all going to use it, it's very valuable, but it should not be exclusively relied upon to accurately report all of the amounts on your return. These tax software programs can get it wrong. I've seen it many times. Now they're getting better and better, and usually where they're going to get things wrong is on the more obscure and unique type of situations. It's not the everyday, normal things that you see in almost every tax return, but you may have some sort of niche situation that doesn't come up very often, and the software just doesn't quite get it right. But in any case, regardless, you are always going to want to check to make sure that the numbers you expect to see on the return are the numbers that are on the return. You can't just put some numbers into the software, assume that it does it right, and file that return. That's why we can't have just data entry people doing tax returns. You have to have somebody who understands taxes and who understands the process. There have been taxpayers who've gone to court and said, hey, I put it in software. I was relying on the software to get it right. It was wrong. And the tax court said, tough. That is not a valid defense. It's the software's fault. Defense does not fly with the courts. It does not fly with the IRS. And of course, anytime you're dealing with computers, you've got this old idea of GIGO, garbage in, garbage out. Doesn't matter how good the software is, if you're putting in bad information, you're going to get an inaccurate output from that software. No matter how hard we try, there are mistakes that are going to happen. Sometimes the taxpayer or even the preparer is going to miscalculate an amount on their return. They're going to put in a wrong dollar amount into the software. They're going to duplicate an entry somewhere. This does happen. Duplicate entries especially are common, and ironically, they are common because the software is trying to be efficient and to help you, and if you don't realize that, it's easy to put the same amounts in twice. So for example, if you have a client who is taking HSA contributions, health savings account contributions through work, and maybe their employer is also making contributions, that is going to be reported on their W-2. So if you go into the software, put in all the amounts in the W-2, then you go to a separate HSA screen, and you then put in the amounts again that your client contributed to that HSA, you're going to have a duplicate. So that's the type of thing you have to look out for. Same thing can happen with state taxes. You get a 1099-G from your state saying that you got a tax refund for the year. If you use the same software last year, it's going to know that you've got a state tax refund. And so it's going to automatically include it. But if you go to the separate screen, enter it again, you could double count it. And then on Schedule C, you get 1099s. Most likely the taxpayer has already included all of the income in their books and records, including the amounts on the 1099s. So if you input the 1099s separately, like the 1099 NECs, and you put the revenue that the client reports to you from their books and records, it's likely you will be duplicating that. So these are just a few examples of the types of things that can be duplicated. So especially when you are getting forms, 1099s, W-2s, you want to make sure that the software isn't already picking that up and then you are separately putting those amounts in. You want to make sure that you only enter those amounts one time. If you do make an error, any type of error, after filing, and you realize it before the IRS points it out for you, then you would likely want to file an amended return. Again, you need to go to your client, explain what happened. They are the ones who are going to decide whether or not to amend the return, but it's likely that it's going to be a good idea to make that amendment. If the IRS notices the error first, then they will send the taxpayer a notice. And the notice might just say, we noticed this mistake, we corrected it, here are your corrected amounts, there's nothing else for you to do.